Put that coffee down.
I'm not here to waste your time, okay? I certainly hope you're not here to waste mine. So I'm gonna keep this short.
Helen, we're both in sales. Let me tell you why I suck as a salesman.
Most valuable commodity I know of is information. Wouldn't you agree?
Coffee's for closers only.
Well, hello there, friend. Welcome back to the Behind Your Back podcast with me, Bradley Hartman, founder and CEO of the Behind Your Back Sales Company. In this podcast, we talk about leadership, personal productivity, time management, and the craft of selling in the construction industry. Now, in our work with our clients at the Behind Your Back Sales Company, we are solely focused on sales performance. How do we grow sales? How do we do it profitably? How do we increase cash flow? How do we reduce risk? Now, in our effort to do that, we are always looking for innovation in this space, trying to understand what technology can help our clients best, which led us to learning more about Blue Tarp Financial. And it was announced in June of 2019 that they were being acquired by Capital One. They're now Capital One Trade Credit. Several of our clients and our friends in the industry have absolutely raved about partnering with Capital One Trade Credit and what that has meant for them. And as we got to know them a little bit more, obviously, Capital One, what's in your wallet, a huge brand name, was interesting what that would allow, formerly Blue Tarp, currently Capital One Trade Credit, what that would allow their team to do, how that would help them service the independent lumber dealer that has one location, as well as the $300, $400 million or billion-dollar organization that also wants to increase cash flow, reduce risk, and grow sales. So I was fascinated to speak to two individuals, Mr. Scott Simpson and Sean Cunningham of Capital One Trade Credit. Now, Scott Simpson is the managing vice president of Capital One Trade Credit. Formerly, he was the CEO of Blue Tarp for 8 years. Before that, he was a VP of marketing at Vistaprint, and he was a vice president at Capital One before that. Now, Scott earned his undergrad at William and Mary. You might be wondering, William and Mary, who is that named after? That would be after King William III and Queen Mary II. That's right, in Britain. They were the king and queen on the throne, and it was founded in 1693. William and Mary is the second oldest institution of higher learning here in the United States. What's number one? That would be Harvard. That's right. They are known as the Tribe. That's right. Kind of a cool name, the Tribe. Their mascot's a griffin, whatever the hell that is. And he earned his MBA at the Tuck School of Business at Dartmouth. Joining Scott Simpson in our discussion is Mr. Sean Cunningham. He is a vice president at Capital One Trade Credit. He was the president and COO at Blue Tarp. And before that, for a couple of years, he did briefly cross paths with Scott at Capital One. Sean earned his undergrad at Cornell, Big Red. Obviously, I'm a big fan of that. And he earned his MBA at Southern Maine. So in this discussion, we talk about Capital One Trade Credit. What is it? How is it customized? I know from my clients that each and every one of them do something just a little bit differently, and their market's a little bit different, and their customers are a little bit different. And I was really curious about how you can customize a platform to make it really adaptable for the different ways people do business around the country. We get into some of the details about the tech stack that supports Capital One Trade Credit. And as I am wont to do, I use this as an opportunity to help my own clients. So I have a couple asking for a friend. That's me. I need some help with my clients and some situations that they are dealing with that are about growing sales, that are about cash flow, that's about inventory management, that's about reducing risk. And I just posed it to them, trying to get better answers for my clients. And you guys can hear those answers. So without further ado, please enjoy my conversation with Scott Simpson and Sean Cunningham of Capital One Trade Credit. As always, thank you for listening. So Mr. Scott Simpson and Sean Cunningham, welcome to the show.
Thanks. Happy to be here.
Good afternoon, Bradley. Thank you for having us.
Well, I know I've probably got like 30 or 40% of the executive C-suite team here on this call. So I appreciate you guys making time. Excited to learn more about you and Capital One Trade Credit. Scott, Sean, we're going to start off like we always do with our first four. But sometimes as we get into these a little bit, I get a little excited and I ask some questions. And to make sure we don't spend the entire time talking about some of your preferences and your history, we're going to split up our first four here. So Scott, I'm going to start with you. Do you remember the name of the first music album you either purchased or received?
Yeah, I do. It was U2 Octung Baby. Which is funny because while I like U2, I've never bought a single U2 album before or since. So it's awkward that must have been my first purchase. I guess it's better than it could have been because I grew up in central Pennsylvania with the hair bands. So I guess I'll take U2 over that.
There you go. That's solid, but yeah, that's interesting. It represents the entirety of your U2 purchasing history right there.
Yeah, it's not clearly not the best one, but
Sean, let me ask you, do you remember the first band you went to see in concert? And if you can tell us, what venue was that at?
Yeah, I believe it was the Steve Miller Band in Old Orchard Beach, Maine. I'm not particularly partial to the Steve Miller Band, not for or against, and not sure I've ever seen them again, but I mostly went because a bunch of my friends were going. I was at that age where I didn't want to miss anything. But what I recall most was the venue. It was actually in a minor league baseball park for what had been the Maine Guides, which was a single A team that had left the area a few years prior. So it actually is the venue in the ballpark that I recall.
Did you see the Maine Guys or the Maine Guides?
Guides.
Oh, all right.
Guides with a D.
Interesting. Have not heard of them. But Sean, do you remember the first job that you had? And the one where maybe it's not babysitting, it's not mowing lawns, like you were paying taxes officially.
Yeah, happy to. I was for 3 years as a teenager. I stocked shelves and was a cashier at a local grocery. I think the tax part is a little acute because back then I made, I think, $4.40 an hour. So $4.40 an hour with tax, I think maybe I could afford a movie. That was about it.
That's funny. Yeah, I remember my first job working at a lumberyard, $5 an hour. And some of the guys that were working there were already annoyed because when they started, it was like $3.75 or something. So yeah, that resonates.
We're making a ton.
Sean, last of the first four here. What was your first car?
It was not my first car, but the car I bought that I really liked early was a slightly used Acura TL. I liked that car. But then my wife and I had our first child, and I had to sell it because it was a two-door, and it was too hard to get the car seat in and out. So it was worth it because obviously I love my daughter more, but I did like that car.
Yeah, the coupe model is tough when you're putting a car seat in and out of the back seat, for sure.
It absolutely is.
Got it. Well, I found it interesting, both Sean and Scott, that you guys both crossed paths earlier on in your careers at Capital One. Can you guys go and maybe, Sean, start with you. What were you doing there, and how did you get involved in the financial part of the business?
Yeah, so Scott and I actually didn't know each other during our first tours at Capital One. And so we worked in different parts of the company and did not meet until we were both at Blue Tarp. And for me, I actually started my career. I grew up in Maine, started my career at L.L. Bean, which is a great place to start a career. But then really my second real job was at Capital One, and really where I get into the financial services, where I spent the rest of my career since then. And so in that first role, I worked in operational planning and analysis with a focus on ensuring we had the right resources and tools available to service Capital One's credit card customers in the contact center, with a high focus on identifying opportunities and initiatives to continuously improve that customer experience.
Okay, great. Scott?
Yeah, for me, before Blue Tarp, I spent 13 years doing a mix of marketing and sales and credit work for, the last part was for Capital One Home Improvement Finance. So this was a business that would provide contractors with interest-free and installment loans so that when they went into a home to sell windows or a deck or whatever, they could make the homeowner afford something that sounded very large into a number that worked within their budget. It's probably not too hard to guess why when I came and got involved with Blue Tarp, a lot of similarities to that business and the one I was in.
Yeah, absolutely. And Scott, was that your first kind of segue into construction, lumber, building materials, contractor services, and those things?
It is. And I think it's funny because my wife will joke that I'm like the least handy person around. So to be serving contractors who are wildly self-sufficient and handy, I was always a little embarrassed by how little I knew about that side.
Yeah, you're not alone though. My wife makes the same comments about me. And I just say, hey, I got to understand what I'm uniquely really good at. And it's better for me to invest my time in something else and pay for a professional. So now certainly understand where you're coming from there. So Scott, not to discount like the 20 years from the founding of Blue Tarp as you developed the platform and really served a lot of customers in the industry. But I'm curious about, can you share some context about maybe the courting process and the discussions that led up to the partnership and the acquisition of Capital One to move from BlueTarp to Capital One Trade Credit?
Yes, one of the things that we have learned in our 20 years is how complex serving small merchants and large merchants can be, particularly in the building supply space. Everybody wants to do it themselves. And as a result, we, in order to serve those dealers, we ended up creating a tech platform that's really flexible and can handle this complexity. And over time, we figured out that if you look around, we actually had the best platform out of anybody. And that includes, very large companies that support some very, very large partners. Once we figured that out, we went looking to see, well, why and how could we get access to not just the small merchants we're serving, but larger ones as well. And there's no better place than to partner with banks and others. We got a lot of interest, and in fact, we had a lot of excitement about our platform. But we also learned that people wanted to partner with us, but didn't want us to partner with anybody else. And once we got to that point, I think an acquisition made sense. Now, Capital One specifically, if you think about a top 10 bank that has renowned reputation, has obviously an incredible depth in small business already, as well as the just ability to invest in ways that as an independent company we couldn't. Putting the best platform and a top 10 bank assets together, we think we're going to be able to serve all our small merchants better, and certainly go after much larger ones, both inside in building supply and outside as well. And so that's the reason we got together.
Got it. And how much did your previous experience or employment with Capital One, understanding the culture and those things, how much of that played a part in those discussions before the acquisition?
I can tell you for me, and I'll let Sean speak to his own experience, it's so important when we think about the dealers we serve, the merchants we serve, and our associates, that the promise of what we offer is honored and continues and is enhanced. And I think having an experience with Capital One, and I spent 13 years, so it's kind of where I felt like I grew up. I have a deep amount of trust with the integrity of the company, the commitment around customer value, commitment to associates. And so it couldn't have been better, honestly, to have to stand in front of both our clients and our associates and say, we're so proud about where we're headed and so trusting in the partner we're going to have. So Sean, I don't know if you have thoughts on that.
Yeah, I think we both knew from personal experience how Capital One really did care about its associates and really did care about doing the right things by its customers. And so, that's what we had tried to do for our company and felt real good that would continue as part of Capital One. Plus, I think that we both taken several, leadership practices from Capital One and kind of applied them to BlueTarp, so that made the transition a little bit easier since we've kind of taken those crib notes.
Yeah, I'm sure. So Sean, in my mind, this acquisition happens, there's a party, you go to the offices, there's a Cube Farm, there's Spike Lee and Charles Barkley and Samuel L. Jackson and Jennifer Garner, they work there full time. Did you party with all those famous people? Yes or no?
I wish I could say yes, because that was in my mind too. That was my full expectation, but it still hasn't happened. We're coming up on our 2-year anniversary, so maybe that's our 2-year anniversary party.
You know what? Yeah, maybe the element of surprise is very powerful. Maybe they're hanging on to that. Yeah, I think they do such a good job and have such strong, consistent brand messaging for people that you like, who you also can make you laugh. And so I think adding that to what you guys offer is really interesting. Sean, I think as I've been talking personally about some of my clients that do struggle with cash flow, credit policy, understanding risk, ensuring that we're not writing off every year tens of thousands of dollars in bad debt. I heard you mention that Capital One Trade Credit is both a partner and a platform in a way that a small-minded individual like me could understand. Could you maybe break down those two on how those are different and how you guys are both a platform and a partner to dealers and the audience that's listening right now?
Yeah, when we talk about a platform, it all does start with our technology platform. So our entire business is partnering with dealers to provide them with B2B credit and accounts receivables programs so that they can sell more to their customers and provide a great experience in doing so. And so our proprietary technology platform, which we developed in-house in those 20 years and iterated over for all that time, is really the key to how we do that. It enables us to design and deliver a program that's customized to fit the needs of each of our dealers. So it really does start with that technology platform that's designed for this industry. It's designed for just what we do with B2B credit programs. And then that's where the partnership comes in. We partner with our dealers to understand what exactly is important to them and their customers. So for example, is it the frequency of daily cash flow that is important? Or is it the certainty of cash flow that is important, and maybe twice monthly funding will work just fine? Or we work with our dealers to understand which channels do they sell and service in, which channels do they want to sell and service in, and how do we best integrate into their technology environment to do so. So we have both a platform and an approach that allows us to understand our dealer partners and to customize to their needs.
Yeah, I think that's really powerful, because I'm going to tee up a question here for Scott on technology, but often with our clients, there's the recognition we need to invest more in technology. However, especially, the last couple of years, but in general, everyone's really busy, and it's how do we implement this, and how do we create enough time in our schedule, and who's going to really help usher us through this? So I think that partnership piece, in addition to the platform itself and the technologies, is critical. So Scott, I find myself over the last couple of years with some of our clients who I love dearly and consider myself as part of the team, but I find myself having some very stern and candid conversations about technology. And when they greenfield new locations and they're putting in fax machines, I feel like it's my responsibility to try to stop that and say there's a better way to do this. And I think in our industry, it's probably not hyperbole to say that some folks are at least a generation behind on technology. In what ways can Capital One Trade Credit help them leapfrog into this decade? And are they able to co-opt some of the technology that you have, and what might that look like?
Yeah, I think just to speak to your first question, when I joined Blue Tarp, I was told that none of our dealers or their clients had smartphones or used the internet. And this was 10 years ago. And so that notion, I think, is kind of quaint, but I think it does reflect that building supply specifically, people have built great businesses over multiple generations doing it a certain way. I think that becomes a trap when, every one of our business clients is also a consumer in their own way, and they've come to change their own perspectives around what they want and need. And that often means 24/7 access to their account, or instant decisioning, or things that are at their ready. And if I can put it in my phone as a consumer, it starts becoming really confusing why I can't go to my dealer and get the same type of treatment. And so I know people have been wrestling with this for certainly in the tenure that I've had at Blue Tarp. The reality is, I've talked about it as the mall analogy. If you go back 20 years, malls were the dominant way people shopped as consumers. And you could see internet sales each year were growing faster and faster, but it didn't really threaten until all of a sudden there's a tipping point and malls are dying. And I think that's going to be the same way I would think about technology for dealers in the building supply space, is that customer expectations are there for a simpler, automated, online, easy experience. And dealers are going to have to figure out how to provide that. Now, they might not lose business today, they might not lose it tomorrow, but at a certain point, if they haven't invested in the right solution, they will. The way in which we can help them on that is most dealers we know, they don't have large IT shops. Their expertise isn't in this. They can effectively rent our 20 years of investment in things like an online portal. For people getting accounts, just go online, click this link. Or if it's get instant decisioning, therefore you can have an account right there. Digital servicing. So as I said, 24/7, if you're a customer on the consumer side, you expect to be able to have an online account. Other things that we have that have just embedded technology into every aspect of the life cycle, or every aspect of the customer experience. Again, we offer that for effectively the cost of a credit card swipe. Doesn't mean we have to be the only solution, but we certainly can bridge them from where they are in a manual experience all the way into something that's 21st century.
Yeah, we were having a conversation with an outside sales rep, and we were with one of his customers, and I just kind of asked the plain vanilla question of, hey, are there things that we can do on the dealer side to help you run a better business? And they're doing kind of high-end residential new construction. And he said, well, I had to go find a fax machine the other day because you guys had lost the credit application. So I had to go literally get the credit application, print it out, and then fax it to you. So he said, could you guys stop doing that? And I just looked to the outside sales rep, and him and I are on the same page on the investment technology there. So faxing over credit applications, yes or no? Is that something that we can move beyond?
That is something that we are fully ready to move beyond.
Well,
And I think to your point, Bradley, I think that the COVID pandemic that we've been going through has hastened that trend. I think both more dealers and more customers have recognized that a good portion of the business can be done remotely, and for certain things it works better that way. And that's really kind of, hastening that trend towards technology.
yeah, I mean, from our own personal family and buying things on Amazon, I think COVID has just been such an accelerant of technology. And I think it's proven over time is that on a long enough timeline, the expectations that we have in our personal lives, over time, those become expectations in our professional lives as well. Yeah, I'm glad you mentioned that. Sean, one of the objections that I get, and I've had this recently with a couple of those sales reps we were talking about, it kind of more of a generalized sense of making it easier for customers, whether it's looking at their account online, e-commerce online, but reducing friction in the buying process. And I think a very real concern is having talented outside sales reps that say, hey, listen, the more you remove friction and make it easier, we really have to question what's the role of the outside salesperson. If in the future we make it so easy they can just go online and buy. Now, I have my own rebuttals, a couple different angles there, but I'm curious for the outside sales reps that are listening, and we have an awful lot of them, how might you kind of reframe this thinking for them to say, in actuality, this is a good thing for you, and this is how it's going to benefit you and your customers?
Yeah, absolutely. We hear this concern a lot of times too, in kind of several different forms. I think what we communicate to the outside sales reps is that our purpose is not to diminish their value, but rather to augment the resources that they have and to take certain tasks off their plate so that they can spend time with the relationship and spend time with the interactions that really matter. Research shows time and time again that pro customers value the expertise, the advice, and the problem-solving service that they get from pro-focused dealers and they get from OSRs. And that is where the OSRs truly add value and where they should be spending time. We enable them to do so by taking certain tasks that are associated with credit and receivables off their plate. And that means giving the customer the ability to, make purchases online on the account, or to facilitate that, to request. So the customer can request and access their invoices online, so they don't have to be pinging their sales rep for invoices online. To allocate payments the way that they want their payments allocated. So to go online and say, I want to make a payment, and these are the 4 invoices that I want to allocate that payment for. So doing all those things and letting the customer choose how they want to do it, at what channel, at what time, where they want to do self-service, that really kind of both satisfies the customer, but also, again, frees up it so the OSR can focus on those truly value-add tasks, like the next time the customer has that big job, and really getting in and working with them on the detail on that. So we really do believe it's a win-win for the OSR and the customer in the long term, and really allowing them to focus on that relationship.
I love that. I'm wondering if I maybe just get a little bit more specific on that, Sean. It's not uncommon, and here in a couple days or so, as we approach the end of the month, dealers across the country, there's an email that's going to go out. It's going to go to their sales team, and it's going to say, hey, I need you to stop selling, and I need you to have some uncomfortable conversations. And here's a list, and it's in Excel. I need you to call these people. And then salespeople are like, oh, I hate this part of it. So they'll procrastinate. And then they'll have an argument with their VP of sales. Like, this happens every single month. What's an alternate reality where you say, actually, Capital One Trade Credit customers, here's how we do it? What does that look like?
Yeah. So that's a great point. And we're getting to that time of year, aren't we?
Yes, we are.
In terms of approach, I think that, we've seen dealers that do this, really well. And when they get to a customer who they've seen, repeat delinquency or late stage delinquency, is they'll have that very direct conversation with their customers. They'll explain that they have extended terms as part of the relationship, but continued delay of payment has, real negative impact on their business and prevents them from being successful and continuing to service customers the way that they want. And they kind of just, make it clear that the payment issue needs to be resolved and ask for a commitment to do so. And so I think, and most dealers do a great job of this, having that really direct conversation to say, if there is a obstacle to payment, let's resolve it and clear that. If there's not an obstacle to payment, then we're at the point that we need to go ahead and see that payment come in. So a lot of dealers do that really well. But I think, that's something that we can help with. Again, this is part of, from our end-to-end service, something that we do for our dealers on a day-to-day basis. So we really take care of this for them. We pay our dealers up front, so they have that cash flow. They have that, and then we hold the risk of non-payment. So if they're actually, if in the end there is a bad debt, we take that loss. But just as important, we take that same partnered approach to how we do the collections as to our dealers do, because these are long-term relationships. And one of the most important things to us is maintaining those relationships on behalf of our dealer partners. So we have those same conversations. We start with, is there an obstacle for payment? And if there is an obstacle, then we work with the customer to clear it. And if not, then we work to, understand, when and what can we expect to have that payment come in-house. So, again, we take those worries and that work off the plates of our dealers, but we take a very similar approach to, how many of the best dealers do it.
Yeah, I'll say it's not uncommon to have dealers use their frustration or their exhaustion or their stress of dealing with this as a reason to actually change. If you think about it, like, Sean said, like they all get through it, they all manage it, but it's a significant drain on what they wanted to be spending time on. And then also just in recognition of our business and perhaps the differences between dealers is everybody that's doing any customer service or collections activity for us, they're very well trained. They're very well managed. This is their job. And just like anything, if you did it each day, every day, you become really, really effective at it. And so I think in the end, it's the most sacred part of the relationship because there's some tension there, but we're professionals and this is what we do and we do it quite well.
Now, I'm glad you brought that up because being a podcast that talks a lot about sales, we identify the objections. And one of them I'll often hear is, well, hey, what's the risk here when we have someone that no one knows who will call to collect that money? This is I like the word sacred, right? It is. When we're talking about collections, there can be some tension there. And I think in some cases, there absolutely needs to be some tension. And then I will ask the sales rep, how confident are you in your own script, in your own sales process to get money from these people who your livelihood is depending upon? And they're like, exactly. I'm terrible at it. And you're like, okay, well, you just proved my point. Let's find someone who's really good at this and let them do it. Scott, I want to ask you, this past year, obviously the pricing volatility has been unprecedented. And all of a sudden you've had these dealers that, hey, we need to buy as much as we possibly can because there's a scarcity, demand has outstripped supply. Then all of a sudden we're realizing, hey, what we committed to buy, all of a sudden as it hits the ground, my inventory has doubled in total value. And how does that change my risk profile and cash flow? Obviously, you've been living in this. How has kind of your platform and Capital One Trade Credit kind of made some of these risks and concern less so and the dealers more confident as they've been going through this process?
Yeah, I think last year and even still going with pricing volatility, and if you go back to the Great Recession with sort of risk volatility, I think reminds dealers that they're maybe not as protected and secure as they thought. And for us, and Sean mentioned it earlier, we pay dealers up front so they actually get paid and get the cash flow right after a sale. And we deal with either the volatility that would come from that, from a payment, or ultimately people not paying us. And so in a scenario where if I can only buy what I have cash on hand in the next 10 days for, that's a different degree of uncertainty and discomfort in managing a business when you have big, crazy times that are going on like this. So again, our role is effectively to strengthen the balance sheet, by paying you up front and protecting it from risk. You can focus on with certainty around, I know what I have in hand. I can effectively invest into whatever I need to buy, whether it's more inventory or other, without having to guess, am I going to get paid and when am I going to get paid? And so it's really, it's as much taking uncertainty out of the equation as it is the timing of payment.
Yeah. Well, it has me thinking about part of our mantra, and I've been saying it to myself and our team, and then also our clients is, control what you can control. And for a lot of folks, this idea of, hey, when other people are going to pay me, can I influence it and can I control it? Well, those are two different things. I think it sounds like what you're saying is actually you can slide that over to a strong, more confident way to say you can control that.
Yeah, the analogy that I offer, because think about like a credit card. Now, credit cards aren't the normal obviously payment method for most of our dealers' customers, but most dealers would gladly accept a credit card to get paid tomorrow and pay some interchange to make that happen, particularly with the customers that either pay them really slowly or they're worried that they won't pay them at all. And so while we're very different than a credit card, I think it's helpful to sort of compare the value of the certainty, the value of the payment the next day or the next week, whatever it might be, oftentimes is the difference between businesses that are on the offense and those that are like wondering if they're going to be okay. We've seen, unfortunately, a lot of really good businesses that get upside down just by one client that they've been waiting on. And usually it's a very sad story.
Yeah. Well, I could go on a soapbox here, but we kind of stress the importance of kind of this idea of a power curve. If you look at your customers, all customers are far from equal. And on a power curve, it's like it's the 80-20 rule on steroids. And that oftentimes your top 1, 2, 5, or 7 customers, even on a business that's doing $100 million, if there's a default in there or there's a loss of business in there, that can be catastrophic. So no, completely agree with that. Sean, I'm going to kick this over to you a little bit. I'm going to kind of pose this as an asking for a friend. Partly of what I use this podcast for is I have these things that I'm struggling with to help our own clients. And sometimes I have no idea what the solution is. So then I have someone smart on the podcast and I frame it as an asking for a friend. And then I'll tee it up for you. Asking for a friend. Obviously, I spend most of my time with kind of executives and sales professionals looking at sales performance. And obviously, credit is part of that. It is not uncommon to have sales and credit. They're like the Hatfields and McCoys. It seems like oftentimes these credit lines are too low, but we need to get a house pack and exterior doors and windows out to a customer. Then we have to go to a manual override. So then we have this little process and this dance we need to do with this guy over here. And then we override them so often that the whole idea that we're going to diminish our risk, now we don't even know what our risk is because we just kind of blow by these overrides. There has to be a better way. And sometimes other than just like I always start with kind of understanding the current process and then I show it to them and they're like, all right, we agree. This is kind of dumb. What's a better way to handle this to understand that both sales and credit, we're both after the same thing, which is profitability and helping our customers grow at a reasonable risk level? How might that work with some of your clients who are using your platform and you guys as partners?
Yeah, the tension between sales and credit's, a long-standing one. Sales are obviously imperative to the success and growth of a business. But as we talked about earlier, proper credit discipline is critical too, because one bad debt loss can wipe out the benefit of 10, 20 or more good sales. So you really have to be careful that you're making the right decisions in that credit space. We are able to help in a number of ways. One is really by bringing sophisticated credit models and tools that the average dealer cannot bring to the table. And, this allows us to pull information from a wide variety of sources, a broader range than a dealer might be able to on their own, to have access to all of the relevant information and really then feed those into some sophisticated models that allow us to really make the right decisions. And those right decisions are not just kind of, avoiding the potential customers that might result in a big loss, but it's also identifying those customers where you can give those big lines to. We're identifying those customers where you can not have that small line problem and you can do more and more business and grow with those big customers, which is really equally as important. So that's one of the things, and particularly for many of our dealers right now is they're really trying to grow. There's a growth opportunity out there moving online. What that does result in is that you don't know all of your customers as well. So where many of these relationships are longstanding relationships, and I know this customer, I know his name, I shake his hand, some of that is changing. And as you're getting into new relationships, you really have to be careful about fraud. You really have to be careful around a variety of things that kind of, having our models and the sophistication and what goes into it, really can help. I think another piece that we do, that said, is where our partners have relationships already, we take that into account. So we don't discount the information that our dealers have and the history that they have with their customers. So we will take that into account. If they have, a longstanding history and have purchased, that goes into our decision as to what is that credit line and what can we do with that customer. And also have all of the tools and capabilities so that when that increase is needed, is that we will work with our partners to say, hey, here's a permanent credit line increase or a temporary credit line increase, again, using all of that data that's available to us. And kind of the one last thing that I'll put forward is that we have a tool called Dealer Smart View that really brings these things together and that allows both of the sales reps at a dealer as well as the credit staff to know exactly what is going on with their customers. So they know when the last payment was made. They know if the delinquency is started creeping up. They know what that credit line availability is, so we can start talking about if we do need that credit line increase. So we put in a lot of different tools in place to make sure that we get the right credit to the right customers, but to your point, while still having that discipline so that we don't overextend ourselves and get our dealers in a bad spot.
Yeah, I like that phrase you used, of proper credit discipline. And I've kind of found is where there's the most friction between sales and credit and kind of the sibling warfare, it's mostly about transparency. Do we understand what we're doing, what we're not doing, and why we're doing it? And sometimes that is very unclear. And then once we kind of clear that up, then it's okay. Now I have a decision to make and someone's going to make that call and we're going to move forward. So I think that transparency piece and the Smart View platform would solve a ton of issues that we're dealing with. Maybe if I can, one more, Scott, I got another asking for a friend. I'm kind of checking my box off as I'm pulling in my billable hours here from my clients. I'm just joking. I don't have billable hours. So say I've got a double-digit location dealer. Say they're doing maybe 250 million to 300 million in sales, and they're growing a lot of their builder clients. However, they're seeing that their builder clients are passing on their businesses to a younger generation. And we have this happening a lot with the demographics in our industry, where we have some very talented, experienced sales reps who've been doing this for 30, 35 years. However, the relationship is very different when they're going from a 65-year-old owner to a 34-year-old son or daughter who's going to take over the business here. As we think about the Gen X and millennials, and they expect more of a frictionless process, how quickly are you guys able to help dealers say, we can flip that switch? And if the new business owner, who's your number one account, and we're seeing their purchases go down, we can go and talk to them about flipping the switch and getting them on a newer, easier way with more transparency and leveraging this technology faster. How long does that take, or what other approaches do you take to help these dealers in that situation?
Yeah, let me just start with the premise. It's absolutely true that building supply is a relationship business. Our observation is that those relationships are not as deep or as enduring as dealers would like to believe. And even without the millennial sort of the transition from generation, you're just seeing things that break that apart. Sean mentioned one of them, but if you just think about e-commerce and the fact that buyers are really looking for what will save them time, save them money. And the best relationships really, if they can't overcome those gaps, those relationships don't stay. And so I think, in your specific example, we actually are the technology solution, or can be, where, as we mentioned before, being able to upgrade in one step the entire customer experience from manual, slow, only open during office hours, to digital, automated, at your service, as well as, but still has the same customization and the experience that you've come to expect. That's something that our investment, our 20 years worth of technology investment is put in the hands of our dealer partners. The number one thing we recognize is lending or providing customers to a different experience can be fearful. Yeah. What's going to happen to them? Are you going to treat them well? And I think we wouldn't have a business if we weren't able to both meet or exceed actually the experience that they're having today. And so for us, I think the proof is coming and sitting down and comparing your experience and what it really is through the eyes of your customers, and what it could be is particularly powerful. And if it is a millennial or a Gen X buyer on the other side, I think they're going to get it right away, because that's how they grew up. It's sort of the Pepsi challenge. Let's look at where the world's going and look at where you are and make sure you're on the right spot.
Yeah, well, especially in the market dynamics that we have now, again, demand outstripping supply and supply chain issues and pricing volatility, everyone in the market, even the most loyal buyers, are talking to as many people as they can just to try to understand. And there's something new and different, and that immediately resonates. that loyalty can change in an instant when people feel like their business is on the line. So I completely agree with that. Scott, on your LinkedIn profile, you said that you have a lot of experience and expertise bringing innovation to market. Sometimes innovation in our market, that means, hey, we should talk about a new CRM. And I know Salesforce has been around for like 2 decades, but that's new. As we think about, in my narrow view, when I immediately think of innovation these days, my mind generally goes towards artificial intelligence. It goes to machine learning and things like that. In terms of innovation in our space over the next several years, what do you see? What do you see coming down that you're going to say is, hey, when we get to 2026, this is going to be standard. This is going to be a new force that we're going to see or be living with more?
Yeah, I think the best roadmap is to look at what the consumer experience has been over the last 10 years and 15 years. And because I think all of those dynamics are coming towards the business side. Some of that, as we mentioned, is the first basic part is, can I get a bill online? The next is, can I pay online, and can I access my account? And then you get to start more to higher order challenges or opportunities. Most dealers would say if they have a website, they're online, but their catalog isn't online. They can't purchase online. And if they could, they can't purchase online with the terms account that they have in-house. So the next leap after that is going to be enabling e-commerce so that you can have a customer buy without having to call in and place an order with your sales reps, and also have all of the discounts and the special treatment already factored into that relationship. So it's intelligent for the customer. That's, the next evolution. And then, as we said, being able to not just have to pay on a credit card online and then pay with a terms account, but have it all centralized together. You're also then getting into mobile app. We'd expect that treatment where people can access, I need something. I need to connect with my dealer. It's, you mentioned sort of before, text versus phone, having billing automated where it drives directly into my accounting package and is integrated. So there's not a paper bill that then my AP person has to, to put that into and then reconcile, and all the reconciliation. If you think about how much time goes towards who bought this, who authorized it, which payment goes to this, it's just a mountain of energy. And there's literally multiple people in most organizations that solely focus on that, and there's not a reason to do so. Start talking about machine learning and automated intelligence. As you get into more e-commerce or more distributed customer supplier relationships, then fraud and is this really a business, and how do I make sure I'm protected so that I'm not sending and shipping goods somewhere for delivery, but that's a fake address? Like, those are the type of things that you really need technology, automation, and investment. I don't in any way expect dealers to invest there. And so they're going to need help. And I think that's where we hope Capital One can be a big part of that journey. Because as we said, we spent 20 years doing that. Now that we're part of a big bank with the investment capabilities, we have so much more to offer from a fraud, risk, investment, et cetera. And so the best of our offerings ahead, and we're looking to obviously help get our dealers there.
Yeah, you just hit on something that I've had. It was 2 within like 2 weeks, and then probably 3 in the last 4 months, issues that I've heard with our clients where kind of a random out of the blue manna from heaven, $20,000 order comes in. But it was weird. Although we're based in Carolina, this shipment was to Dallas. That's all right. Everything checked out, floated through. We shipped the product, and it was shipped out of nowhere. And it was a sophisticated, I think one was gang related. And, salesperson was like, hey, I just thought this one came in real easy, and we had the product and we got rid of it. But that sort of fraud, I just hear it is happening more and more, which is frightening for salespeople that get excited when, hey, we have inventory available, we can sell, and we're trying to do that as much as we can.
Yeah, fraudsters are, if you think about our business is focused solely on something, fraud rings, professional ones, that's their business, and they're looking for the weak link.
Yeah.
And building supply dealers offer an inviting target. We've had multiple examples where building supply broadly has been impacted by a fraud ring, but not our clients because we were able to catch it. And not that they were perfect, but it's a more fair fight with the tools that we have than unfortunately dealers have.
As we touched on earlier, I think particularly as more and more dealers recognize the opportunity and the imperative of going online, that makes it all altogether more challenging to protect against fraud. And it's really a good idea to get help there.
Yeah, absolutely. Well, you gentlemen have been very generous with your time. I've enjoyed this. Maybe just one last question for you. Whenever I get the chance to talk to individuals like yourself, I always want to make sure I ask for myself first and foremost, but also for our audience, is there any book that you, as you look in your career that say, hey, this book really influenced me more than others, or take that any way you want? Was there a recent book that you found really valuable? And if you have one, would you mind sharing it with the audience?
The one that I've read most recently, Brene Brown, Dare Lead, is excellent, really about personal leadership. I think one that kind of from earlier in my career that's always stayed with me is Peter Senge's The Fifth Discipline. It speaks a lot about systems thinking and a learning organization and making sure that the solutions, the quote unquote solutions of today don't become the problems of tomorrow. And so I think that's really stuck with me, of looking around corners and making sure you don't rush into a solution today that becomes a problem tomorrow. So that was always a good one for me.
I love that. If you can get through some of the more academic stuff in there, I think it really just speaks to kind of the organization that really grabs with both hands this idea of continuous learning and continuous innovation and challenging everyone. So that's a good one. I don't believe we've ever heard that on a couple hundred episodes of the podcast. So I love that. And
engineer at heart.
Yeah, Brene Brown is more accessible than ever. She's got like a couple Netflix shows now. Anyway, so she's great. Scott, what about you?
Yeah, so for me, I only read nonfiction, and usually it's biographies. And so I don't know that I would have something readily that comes to mind, but the two that impact me, probably more than others are Ulysses S. Grant and Robert E. Lee. I just actually finished a Robert E. Lee book. And I think part of it that's fascinating to me is the arc of their careers and their lives is not necessarily the glory that I think is quickly ascribed. And I think it's helpful for me to think about their leadership challenges and the stuff that I go through. And even just both those historical figures came to prominence more later in their life. And maybe I'm just hopeful that just means that there's even better ahead for me than what's been here, which has been great. But, I guess those would be the two that come to mind.
Got it. Now, are those two biographies, one of Robert E. Lee and one of Grant? Or was in my mind, there was a book with
they're probably, both of them together? Yeah, I read Grant about 3 years ago, and I read Robert E. Lee recently. So at least for me, I'm sure there's tons of books on both of them, but I actually read them fairly separately. And it was interesting to sort of get both sides of that in a couple years apart.
Yeah. Well, gentlemen, thank you very much. Before we go, I just want to make sure we make it abundantly clear for anyone listening that's saying, when we think about credit, we think about cash flow. For anyone that's a client of mine or listens to the stuff that we talk about, how can I spend more time selling and less time doing all the other things that are ancillary around that? You guys brought up some solutions. Where can they find more information about Capital One Trade Credit?
Yeah, we encourage folks to go to CapitalOne.com/trade-credit to learn more about us. And we'd love to talk to you more.
Got it. Well, we'll make sure we put that in the show notes. Last thing I will ask of you guys, when, it's not if, I know when the party's going to happen, sooner or later. Samuel L. Jackson, Charles Barkley, Jennifer Garner, I want in. Just promise me that you will invite me. Does that seem unreasonable?
As soon as we get that invite, you'll get one too.
Okay. All right. That's all I'll ask. Scott Simpson, Sean Cunningham, thank you for your time.
Thanks so much, Bradley.
Thank you.
All right, then. How did that go? I hope you enjoyed my conversation with Scott Simpson and Sean Cunningham at least as much as I enjoyed talking to them both. I learned a lot. I think they're really smart guys, and I'm really interested in what they're doing and even more interested in how they're currently helping many of our own clients. Now, our goal here is to make this the best podcast you listen to, and I'd love to hear your thoughts, ideas for future shows, potential guests, or any sort of issues you are dealing with customers that are vexing and hard for you. We'd love to dig in a little bit and try to help under our Asking for a Friend segment. So if you have any of these things, any recommendations or ways we can make this better for you, do not hesitate to email me directly at bradley@behindyourbacksales.com. Again, bradley@behindyourbacksales.com. You can also link up with me on LinkedIn, and you can follow me on Instagram at BehindYourBackCEO. If you did find this episode with Mr. Scott Simpson and Sean Cunningham of Capital One Trade Credit to be valuable, please share it with your network and leave a review. Those mean more to us than you know. As always, thank you for listening. We're going to close out with our leadership and sales mantra. You, my friend, You are owed nothing. Deliver value first. Make it a great week.